I'm Sahiti Akala, a part of tax consultancy, host for today's webinar. The topic for today's webinar is UAE tax litigation and latest tax update of 2022. But before we dive right into the webinar, I would like to talk a little bit about ITC. ITC, Accounting and Tax Consultancy, is one of the top and most reliable tax agency firms in UAE. In a short span of time, our team has mastered how to give clients the best tax solutions. Our aim is to ensure our clients' tax situation is fully optimized and they are able to benefit from all the exclusions and deductions available in order to reduce their overall tax liability. You can expect an uncompromised attitude when it comes to the quality and professionalism. We deliver a sleek and professional outcome that sets us apart from our competition. Leadership of Mr. Ahmed Sharafuddin, we have already positioned ourselves as the VAT and excise tax specialists in the market. We have a fast-growing team of qualified and dedicated professionals with innovative and commercial approaches to meet today's highly challenging business environments. The Direct and International Tax Division was formed in the beginning of the year 2022. Led by Mr. Joseph Hallam, it comprises of highly qualified professionals that bring decades of global experiences in multiple jurisdictions. Next, I would like to introduce our speakers for today's webinar. First, Mr. Ahmed Sharafuddin, tax partner. As a founding partner of ITC, Mr. Ahmed Sharafuddin is an integral part of the company, having performed hundreds of tax audits and being involved in more than 50 tax litigation cases. He brings to the table a vast experience in taxation and compliance. Since ITC's inception, Mr. Ahmed has conducted hundreds of VAT and excise health checks, including many of the notorious groups in UAE and the region. With a notorious reputation in the tax litigation, he is involved in building the strategy in many tax litigation cases, as he successfully assisted companies in reducing hundreds of millions in administrative penalties. Next is our senior manager, Mr. Huzefa Abuheba. Mr. Huzefa Abuheba has more than 10 years of experience in accounting and taxation in Egypt as well as in UAE. He's an expert in indirect tax with a working experience in different. In the last 5 years, to prepare, file their tax returns, refunds, reach the highest level of tax compliance. He's having a proven experience in tax litigation cases and could help many clients to reduce and waive their penalties. He is a registered tax agent with UAE's Federal Tax Authority. He is an efficient person working with the high accuracy and with the ability to solve tax complex issues. Last but not the least is our special guest for today's webinar, Mr. Mohammed Baghdadi. Mr. Mohammed is a senior lawyer in the dispute resolution practice group of Habib Al Mullah and Partners. He's based in Dubai. He has dispute resolution experiences across a number of areas, including civil, commercial, tax, criminal law, as well as energy infrastructure, corporate, real estate, construction, and employment disputes. Mr. Ahmed focuses on dispute resolution primarily on tax matters, general corporate international businesses transaction, and white collar crimes, as well as international and local arbitration. From now, I would like Mr. Ahmed to take it forward.
Hello. So thank you, Sahiti, for the great introduction for the webinar today. And I'm so happy to be with you today. So as completing in our, let's say, mission to try to give the people in the market and the committee of the tax the right for the law. As we more mission that we should educate the people in the market. We have seen 5 years that the people have interpretations for the law as per their, and we all can have, but still not get interpretation for the law inside. Being over here for the past 5 or 6 years, UAE has become a very dynamic market when it comes to taxation. There is no single week that just like can pass without getting a new declaration or getting a changes in the law and so on. So far, the FTA has issued some amendments to most of the federal decree laws when it comes to the VAT, when it comes to the excise tax, and even for the tax law procedures. And not limited to that, but also they have issued just like on Friday the corporate tax law. So today we are going to speak about what are the changes that has been done on the VAT level and on the excise tax level. And Mr. Muhammad will be speaking about like what are the changes in the tax procedures law and how that will affect taking the cases forward. So let's start now with the first slide. The important VAT amendments in Federal Decree Law number 18 of 2022. Basically, in that specific decree law, they have made 10 major changes. The first major change is speaking about the tax deregistration cases. The authorities in their power as per the law will issue the deregistration decisions that will be prejudges to the integrity of the law. Also, this step will not be relinquish the right of the FTA from claiming of any outstanding due tax or administrative penalties, which it means we have seen or the cases which they got deregistered and they still have some pending liability, not pending liability. Afterwards, the FTA has come to know that the FTA has some due amount to be paid through a tax audit, through a sudden audit, or the to get funding a company who just deregistered from. Going to the second, continuing on the actually comes to the zero rated and standard applies here in. We all know that the only happened so far the 5, it was only for the change the supply of service, and that was the only change so far. Now the FTA has been so, and they have issued more amendments on the law, and they make the things more into line and try to make most of the things more clear. So it will be to reconsider been doing the right tax. So here they are speaking, and when you are a sale, making a purchase through an agent. So earlier, the residency of the agent was like as the place the print, but in the new amendment law, the place of residence of the principal will not be considered. So if any company is getting something from, like let's say a principal that we have outside, and he has an agent who is active, and then let's say just exporting the goods under his name, this transaction should not be decided as a zero rated, and the residency or the place of residence for the principal himself, it's not going to be the main here will be the for the agent who's a principal. So let's go to the third change. The value of supply and deemed supply for related parties. In addition to other articles, article number 37 that was included in the exceptions of this decree law for the purpose of the value of the supply and deemed supply. So the impact here is speaking mainly about the, let's say, the transaction with the related parties. It will be an exempt supply. The supplier should issue a tax invoice under a deemed supply concept with the market value of service, the cost incurred. So here, on the market value when it comes to selling the goods or giving the goods to one of the related parties. The law has been speaking about that in the, like, before the amendments, and hence we have only 10 amendments, and the related party transactions is choosing one of the amendments. So I'm sure it is like the FTA really emphasize on that with the upcoming of the corporate tax law and the transfer pricing, and hence the FTA also when it comes so far a limit, a threshold, a minimum threshold for the value for the related transaction between the related parties. So I hope they will issue something for the related party transactions. Have to make a transfer pricing study for even if it will cost under forward for the goods and services rated. Only supply of goods and service were subject to zero rating, but the new amendment states that the import of the concerned goods or service will be subject to zero rated. So, what are those services or what are those goods that will instead of being zero rated, instead of being standard rated, it will be a zero rated. Prior to the to amendments, the means of transport, the transport for the passengers or the goods, aircraft or vessels designated for rescue and assistance by air or sea, crude oil, natural gas, healthcare, and related goods should the importers of those goods should ensure that they correctly levy VAT at the zero rated and ensure that the import documentation such bills like the bill of lading, the commercial invoices, and all the whole set of documentation should be there to ensure that to ensure that the nature of the imports should be zero rated. So going forward to the fifth change, which speaks about the reverse charge mechanism. In addition to supply of crude oil, refined oil that has been included in the list that would qualify for the reverse charge as per point 4A, the new amendment states need for written declaration that the acquisition of the goods is for the purpose of resale or use for production or distribution of any form of energy. We all know that when oil and the refined, it should be, but for the law, the year like to emphasize, and they have in another way, and the impact will be as follows. The supplier of hydrocarbons that are not pure hydrocarbons will need to account for VAT at a standard rate on their supplies, unlike supplies of crude oil and natural gas will remain as a zero rated. Moving forward to Article number, the recovery of input tax. As we know, for like it was mentioned earlier before the amendments, that to be able to recover the input tax, you should meet some conditions. The first condition is actually to have and hold the tax invoice with you. That's as a first condition. The second condition is you have the will to pay the invoice within 6 months of the agreed date. So here also the law emphasizing on receiving and retaining the tax invoice, the import, the input tax was paid or declared. So again, as we were saying, the taxpayer should keep the documents for any purchase that he is making and should retain all the import declarations for the goods. They are making an audit, like firms, I mean, they are not giving that much attention to the imports that the company is doing. But the import reconciliation on a quarterly basis or a monthly basis, it is highly recommended, as we are actually claiming it back through the reverse charge mechanism. Going forward to the seventh change, which is recovery of tax by government entities. The law provides conditions on the recovery and execution of tax for government entities and charitable trust. So the impact here, the amendment of this article has made it clear that to recover the input tax, the transactions must be incurred for the purpose of souvenir activities of the government entity, relevant charitable activity of the charity. If a charity is actually having, let's say, some charity the it should be relevant to whatever the main charity activities that that organization has been going forward. Tax adjustment amendment, that amendment states that the tax credit note should be issued within 14 days as per the situation specified in clause 1 of our 61 of the decree law. The requirements to issue a tax credit note within 14 days is a new addition to the law. Business should ensure to have in their system and identify what are the cases that the credit notes should be issued, and it is coming within of having the reason in Article 61, which going forward to the ninth, and that's the last slide that I'm going to speak about, carrying forward the excess of recoverable tax and tax recovery. Some people, in some cases, they were having some refunds for for some certain reasons, and after that, they are going to have a payable position. So the FTA has now trying to emphasize that they will be carrying forward whatever the balance that you are having, and the FTA has the right to set it not only against if you are payable position of subsequent returns, but also they are giving them they are giving themselves the right to offset it against any tax liability that will arise or any administrative penalties that will arrive that will come after. So if you having that was a practice that the FTA has been, but now since it's coming in like in the law, so they are just like giving the right for the practice that they have been doing before. So that one is having some let's say refund, and that company, that specific company, under audit from the Federal Tax Authority, so they would put the VAT refund on hold until they will finish whatever the tax assessment will come up with, so they can offset both together. It was a practice and it was well known, and now they have put it in the new law, which it will be applicable like from 1st of Jan 2023. Now for the statute of limitation, inclusion of the states the right of tax authorities can conduct the tax audit for the concerned company and its time limit. So the tax audit can be conducted before the expiration of the 5 years from the end of the relevant tax period, or within 4 years from the date of notification of the tax audit by the FTA. The FTA can conduct a tax audit after 5 years if the VD is filled in the 5th year from the end of the tax period, during which is the FTA must complete the tax audit within 1 year from the date of submission for the VD. The FTA may conduct a tax audit or issue tax assessment notice within 15 years if they suspect of a tax evasion in the company. A voluntary disclosure cannot be filled by the taxable person after the lapse of 5 years from the end of the relevant tax period. So here we will speak about a very important topic. I will just like try to explain it from a tax perspective. And of course, Mr. Muhammad, our special guest, will be touching it from more law to the litigation. So here the FTA is taking out the rights of making a voluntary disclosure if 5 years has been lapsed from the relevant tax period. Let's say now for the VAT, if you will need to make let's say for you're a monthly like return filer and you have a return in Jan 2018, so which it means by 28th of February 2023 you will not have the right to make disclosure. That's one thing. You are making a voluntary disclosure to look into it and 1 year some limitation work and for whatever they are disclosure, they have for 4 years to finalize the audit. So far from what we have been saying, because the 5 years has been ending for the excise tax, the FTA has conducted some or issued some tax audit notification for a lot of companies to reserve the right to conduct the audit, and that actually will give them the how to say the right to continue like how to say to keep your books and to keep your records for another more 4 years. So instead of you have like that, instead of you having an obligation to keep all the records for 5 years and so on, once the FTA will issue a tax notification, like an tax audit notification to you, then it's done. You have to keep it for another 4 years, which I see it's a little bit hard for the companies. Like, of course, when it comes to big groups to keep the records, like for 9 years. And they are emphasizing also for the 15 years if the FTA will feel that there is a tax. So you are required to keep your records and to have your 15 years. If the FTA will be able to prove that you have a tax evasion, and that can actually prove through the court. Mr. Muhammad, our special guest, will be speaking about that also. But like, long story short, about the statute of limitation, I see it as a way to extend the period for the FTA to conduct the audit, and taking the option of making a voluntary disclosure after 5 years. I think it actually limits the options for the taxpayers, because if we will take it that way and the FTA might make an audit, then we will be qualifying for point number 12 of the cabinet decision number 49, which it will be so aggressive for the taxpayer. So you will have to pay basically for the tax audit 50% plus 4% for the mistakes that the FTA has been found in any tax return, and you have this 4% on a monthly basis. On the other hand, if you will make a voluntary disclosure, the maximum penalty that you will be taking will be 40%. So, as a personal opinion on that subject, it is very crucial amendments that everyone should look after. And actually, I believe that this is the time, if anyone has any changes, to start immediately to rectify those mistakes, because it's a little bit well known that maybe the FTA will take the same actions when it comes to the VAT as they have done for the excise tax, to start and issue a tax audit notification for most of the companies. Going forward to the important VAT amendments in executive regulations for the VAT decree law number 8, cabinet decision number 99 of 2022. I would like to thank all of you for having the time and listening to the explanation that I was trying to say. I will now let my colleague, Mr. Huzaifa, to continue and take you from here going forward. And I would like to let you know that by the end, you can ask questions as you can. So you can start, Mr. Huzaifa. Thank you all. I will be back by the excise again.
Thank you, Mr. Ahmed, for the shared information. And thank you, everyone, for attending today's webinar. So actually, there is two main changes have been made in the executive regulations for VAT. The first one is the supply of service, article number 3. Actually, in article number 3, there is an exception has been added addressing that the supply of services by a natural person acting as a director for the member of board of any government entity or private sector establishment will not be considered as a supply of service. So actually, there is this is one of the many changes have been made to the executive regulations, and the impact of it for any natural person was registered for VAT. Now he need to reconsider the situation and the threshold that he used to do the registration. So it's important to note that in case the natural also has activities other than performing the director that qualifies as a supply of goods and or services, So under Article 19 of Federal Decree Law 7, only performance of function as director on a board of directors will be excluded from the calculation of registration threshold. So actually, with this amendment, so many individuals, natural persons, now need to reconsider their registration. So they need to make an assessment for their supplies. So if they are only supplying service of directors, so they have to, by January 2023, they have to submit the registration request to FTA. But in case they have other supplies, which is qualified to be part of the threshold of registration, so they will just exclude their supply service as directors, and they will continue the submission of their other supplies. The second change of the executive regulation, mainly in Article 72, it's about record keeping of supplies made. And actually, in this article, there is exception addressing that if the value of taxable supply is made by the taxable person through an e-commerce. So here they are talking about only the supplies have been made through e-commerce, exceed 100 million dirhams during the calendar year. Taxpayer must keep the record of the transaction for every emirate in which the supply is received. So this is additional requirements from FTA to taxpayers who are conducting their business through e-commerce platforms. In case their supplies exceeding 100 million per calendar year, they have to maintain record to segregate the supplies emirate-wise as where it received. And actually, in this article, they have give time limit for the implementation, and it has been mentioned for applying the provision of Clause 4. It shall be applicable to the taxpayer whose first tax period begins on or after 1st July 2023 for 18 months, whose taxable supplies via e-commerce exceeded the threshold prescribed as in Clause 4 during the calendar year, ending 31st December. So basically, that was the second mini change in the executive regulations. And mainly, this is targeting the companies and the tax register who are performing or having business activities through e-commerce platforms. So this is additional requirements should be taken care of in the coming periods. So now moving to the second slide. Now we are going to talk about the important VAT amendments in Federal Decree Law number 28 on tax procedures. So we will highlight only tax procedures. Mr. Muhammad later on will emphasize more regarding. So first change, the first amendment. So to be noted that this tax procedures law will be effective from 1st March 2023. So first amendment have been made. It was in Article 1, which is definitions, and there is some more definitions has been added, such as business day, tax residency certificates, and tax residence. And also there is some language enhancement to existing definitions have been made. It didn't change much in the meaning, but actually of the definition. Second change, articulated copies. Actually, there is a new clause has been added to Article 5. And actually, this clause putting like most of the responsibility on taxpayers when it comes to translating documents and this all. So as we know, like FTA mainly require all the correspondence to be in Arabic, but also they allow other language. But still, they put on you the responsibility. I mean, the charges and the accuracy of the translation in case you are submitting translated documents. The third in the tax procedures law, it's the determination in Article 9, the determination of payable tax. And actually in Article 9, it's mentioned there, allocating payable taxes now give the authority to apply overpaid taxes or tax credits to unpaid tax liabilities if the taxable person doesn't clearly state the allocation order. And actually that was the practice earlier, but now it's emphasized and clearly mentioned in the law. So in case you have made any payment, I mean extra payment, or if you have any credit balance with FTA, and you didn't allocate it, like either you want to pay for a specific tax period or you want to pay it for penalties or tax dues, then now FTA has the right to allocate it for any tax liabilities they see it's sufficient. Now moving to the fourth change. So fourth change mainly in Article 16, and it's regarding right of authority to perform tax audit. So as you were aware that in the previous law, I mean in the current law, FTA have to notify the taxpayer 5 days period conducting the audit. And actually in the new amendment in tax procedures law, it became 10 working days. So starting March 2023, if FTA would like to conduct an audit, they have to notify taxpayers 10 days per year. And definitely this is for the benefits of taxpayers. As you are aware that earlier, it was a little bit challenge for many taxpayers when they are getting the notifications only 5 working days before FTA are coming. So now it's more relief for taxpayers. And regarding this point, actually, I would like to emphasize more. That's why we always advise taxpayers, just always keep your records ready, always keep all the documentation and everything is available and reachable. Because definitely when you are getting your tax assessment notification, it will not be such enough period to arrange your documents. That's why each taxpayer should look into the records. Even they can seek the help from external party to help them to arrange their documents and records to be complying with tax law. So if you get such a notification, you will be ready. Now going to the fifth change in the tax procedures law. It has been made in Article 23, tax assessment. So earlier in the previous law, it was mentioned there that if taxpayers with the tax assessment result within 5 working days. Now again, they extended it to make it 10 working days. Now moving to the change which has been made in Article 24 regarding administrative penalties assessment. And actually, this is also a big change for the favor of taxpayers as well. So as per the new amendment, the maximum administrative penalties that the authority may apply have been regulated at 200%, which is 2 times of the tax amount. Earlier, it was 300%, which it was 3 times of the tax amount. And earlier, there were a minimum of the penalties, administrative penalties. It was 500 dirhams. Now it has been removed. So I believe this will be a good relief for many taxpayers who had some difficulties in the previous penalty rate. Now it has been reduced to only 200%. Now moving to the next slide. So the next change that 2 articles has been added. which is Article 26 and 27 regarding procedures and measures and reconciliation in tax evasion. I believe Mr. Muhammad Baghdadi will emphasize more regarding this, but for the brief that it has been added 2 articles regarding procedures and measure and reconciliation for tax evasion. And actually here, like it was emphasized in the law regarding the tax crimes. Now there is many new conditions have been added regarding tax evasions and the rights for Director General to submit criminal cases against the taxpayers who are deliberately not paying their tax dues and tax penalties. It was emphasized there, and also there is how to conduct a reconciliation. So in case there is a criminal case, I mean before filing it, after filing. So this new article has been added, and I believe Mr. Muhammad will emphasize more in it. Now moving to point number 8 regarding the change have been made in 25. Which is about tax crimes and their penalties. In the previous law regarding tax evasion cases, the penalty should not exceed 5 times of the tax amounts. But actually in this new amendment, which will be effective from 1st March 2023, has been reduced to 3 times only. And there is monetary penalty as well has been added, which shall not exceed 1 million dirhams. Now moving to the change have been made in Article 28 regarding tax assessment review request. Actually, this is a new article has been added, and this is actually introduce a new stage to the dispute resolution process. Earlier, taxpayers, when they are getting a tax assessment, they can only go for reconsideration. But actually now with this change in the law, taxpayers, they can within 40 business days, they can submit a request to review the tax assessment they have received. Now moving to the other slide. So here in Article 39, there is a change has been made giving the limitations for taxpayers to submit refund requests to FTA, and also give FTA the criteria how they can approve this refund and make payment to. So actually there is a one which mentions that the authority shall offset the refund amounts with any other payable tax or undisputed administrative penalties before refunding any amount related to a specific tax. And actually there is additional clause have been added to state that authority may be first if there are other related to the tax. Second, if the tax audit, and in this case the authority may not refrain from returning the remaining amount unless the conditions specified by a decision of the authority board director are met. So this again emphasizes on the point that if the taxpayer is under audit, or if the taxpayer has any tax liabilities, so FTA can reject the refund request. Especially now we are moving to corporate tax, so now taxpayers with excise goods have excise. So I believe so FTA later can refrain and can reject any refund request from taxpayers in case they have an disputed tax liability or they have any other tax dues. Moving to Article 40, collection, tax and administrative. a new provision, a new article has been added to the law, which is stating that the Director General of the authority may ask the judge at the competent court to issue an order for the seizure of assets of the person as an equivalent to the payable tax, when it has been made known that the payable taxes due to the authority are susceptible to potential loss. And actually, this is a new article, new provision has been added. Now, FTA, with decision of FTA, has the right to submit a request to the judge at the competent court to seize assets of the person who is deliberately not paying tax dues and tax penalty. And actually, the most important change from like tax perspective here is the second part of the change, which regarding that any person who receives any amount as a tax must pay the amount to the authority, and it shall be treated as tax payable tax. And actually, I believe this will be hitting many businesses, because as per this article introduced, which will be effective from March 2023, any taxpayer collected tax amount, even if he collected by mistake, even if it was collected like in a wrong grade, and he must this amount to FTA, because this considered as tax amount collected, and it must be paid to FTA. Now moving to next slide. So again, here in tax procedures law, they have added the statute of limitation, also as 9 of new amendment for Federal Decree Law number 8, and also it has been added to the excise law. It's again, it's about the time frames that FTA can conduct an audit, which is 5 years from end of the tax period, and also gives a limitation in case first taxpayers cannot submit voluntary disclosures after 5 years from the tax period. And if you submitted voluntary disclosure in the 5th year of the tax, right to check and approve it within 1 year from the submission of voluntary disclosure. And also regarding taxes, if he believes that there is tax evasion happening, they have the right to conduct audit for 15 years. Also for non-registered, in case someone supposed to register and not register, FTA has the right to conduct audit for 15 years. And as Mr. Ahmed mentioned earlier, FTA have sent many notifications to taxpayers that they are under audit, just to give more time limit to finish the audit, which is additional 4 years. That's why, again, we are seeking all taxpayers that they have to maintain the record and documentation and everything to be compliance with tax laws, because yeah, there is 5 years, but also there is additional 4 years, and there is 15 years. Now moving to next slide. So in this slide, we are talking about the tax law compliance, importance, and consequences. So actually, from the beginning, from the very beginning, the formulation of UAE tax framework was to simplify the understanding of law and easier implementation of the same. We understand that many businesses, many taxpayers faced a lot of challenges to at the beginning of the law implementation due to lack of some information or due to misunderstanding. But still, the tax law in UAE and the framework was to and the understanding of the law. Here we have the importance of tax compliance and the consequences. So we shall start with the importance. First one is books of accounts are aligned with tax law. This is very important point and very crucial, and some taxpayers are not focusing on it. Actually, maintaining as per tax procedures law, taxpayers are obligated and they have to maintain books of accounts. Many businesses, especially small businesses, they are neglecting this point, and we have seen for many taxpayers they don't maintain records and books of accounts, and some of them they maintain books of accounts, but actually it's not matching with their tax returns, which is very risky, because in the cases you are getting any audit from FTA, your books, your balance sheet, your trial balance, all should be aligned with your tax returns, or all should be aligned with the tax law. So second, the important thing, it's about safeguards business from any tax liabilities or administrative penalties. So what we used to say to taxpayers, audit yourself before you get audited from FTA, and you will save time and money as well. As we all know, in the tax law, in there is the and taxpayers are not complying with tax law, there is huge penalties which definitely will affect your business and will affect your profitability and will affect your operations. That's why take some time, look into your tax compliance, make sure that everything is aligned with the tax law, then you will be saving your time and your money as well. Third point in the importance is it helps to build righteous conscience with government, paying the tax on time and correct disclosures of the returns. And fourth point, it helps to build a strong tax economy for the country. And we all know, like when the country is introducing new tax system and new tax rate, definitely this is have a return on the economy, and definitely this will benefit all the established companies in this jurisdiction. Point number 5, business have better accountability since the transactions are aligned with tax law. As we all aware that now if you are going to have any business with any third party, everyone is asking about your tax certificate, about your sometimes about your tax returns. So actually complying with tax law, this is giving more credibility to your company and to your business. Many companies definitely they wouldn't like to have a long-term relationship and long-term business with your company if your company is not complying with tax law, because if you are not complying, there is more risk, and definitely this is affecting your business and your partners. Last point regarding the importance, it's about better credibility in build of the business being tax compliant. So again, being tax compliant, will help your business, will help your operations, will help the company in general. Neglecting this point, even if you are saving money as of now, but later it has its consequences on the company and on the operations. Again, now we have the consequences for tax law compliance. So first point is risk score of company would be high since the business lack tax law compliance. Second point is risk of attraction of penalties, as mentioned in cabinet decision number 49, which I have mentioned earlier. Third point, risk of facing tax audit or tax assessment from FTA. Again, we are talking about 5 years, additional 4 years, additional 1 year, 15 years in case of tax evasion. So the risk of audit is still out there. So you have to improve your tax compliance. Another point is lack of credibility in the market. Again, as I mentioned, if your business is not operating and complying with tax law, will give less credibility and will definitely will affect your business. We have many clients, many taxpayers. They are not getting proper tax invoices. They are not getting proper tax rate, and sometimes this leads them like stop dealing with these third parties. So always compliance with the law will help your business. Now moving to the next slide. Okay, so now this is regarding voluntary disclosures. Are they always the solution? So actually there is many change have been added to the new tax procedures law. So earlier, if a taxpayer noticed an error or submitted tax return, and the error or mistake was less than 10,000 dirhams tax amount, so they are allowed to correct their mistake in the current or in the next tax return. But if the error or the mistake is more than 10,000 dirhams, so taxpayers, they have to correct their error within 20 working days by submitting voluntary disclosure. Actually, there is a new amendment have been added regarding in case there is no tax liability. So that one was not there in the previous law. So this will be effective from 1st March 2023. This is regarding voluntary disclosures. So now voluntary disclosure is required in order to rectify an error or report an omission, even if there is no difference in the amount of tax due. So again, because we all have seen these errors for tax returns for many taxpayers, wrong allocation for the reported sales, emirate-wise. So some they were reporting in like generally in many emirates, some they reported in one emirates without looking to the fixed establishment place. So now with this new amendment, even these errors require to submit voluntary disclosure. Definitely the penalties and the process for it still is not announced because the executive regulation of tax procedure is still not released. So, but in general, as of now, based on this new amendment, even if the error or mistake has no tax impact, still businesses are required to submit voluntary disclosure. And we have here the pros and cons for voluntary disclosure. So we can start with the pros. So filing of voluntary disclosure intimates FTA that taxpayer is tax compliant. So I understand many taxpayers, they have the fear of submitting voluntary disclosure because this will bring the attention of FTA and it might get an audit. But actually, on the other side, I believe this is helping your business. This is because you are conducting your audit, your own audit, you are checking your own record, and accordingly, you are rectifying your record. So I believe this is a good point for you. It's not against you. Second is it provides relief to taxpayer as it provides platform to rectify the error. So many taxpayers as of now, they don't know. They might think that we have a mistake. We might have an error. We might did this wrong. So it's all about might. They don't have certainty. They are having the headache. They are scared. What would happen? So it's better that just go through your get, make sure that it's you free and you will focus on your operations. So the cons regarding voluntary disclosure, the risk score of company would increase. The FTA is aware of areas of the company. and also outflow of money, paying penalties while filing the VD in the portal. But again, as Mr. Ahmed mentioned earlier, submitting voluntary disclosure, making the payment of the tax amount and penalties is a way less than having an assessment. The penalty rate is way less than getting an audit and getting an assessment from FTA. So this is that's it for the voluntary disclosure. So moving to next slide. So next topic is regarding excise law. So regarding excise law update, so I would like to thank everyone for attending this webinar, and definitely I will see you later in Q&A. And now to Mr. Ahmed regarding the excise law update.
Thank you, Mr. Huzaifa, for the great and giving us the right. So informative. So now going to speak about what are the excise law updates that has been issued and has been changed for the federal decree law number as federal decree law number 19. And both of them, the first one, federal decree law number 7, will be effective from that was effective. It is issued in August 2017, and it was effective from October 2017. And the federal decree law number 19 of 2022 that was issued on 26th of September, and it is effective from 14 of 14 of October. So we all know that the changes in the federal decree law pertaining to the excise tax is not that huge, okay? Because mostly the excise tax is more about the process and how actually you can maintain the process, because it's a step after another. And if you will fail in one step, then the whole process will collapse. So the first change in the law, the FTA is emphasizing on one specific thing, that if you are importing anything from outside UAE as an importer for one time, or you are not doing it regularly, so you will have to pay. So it was there clause 3, imports other than conduct shall be tax registration, not prejudges to the obligation to pay the due tax on that import. An additional provision was added in the amended law, whereby any person who imports the goods for the purpose of other than conducting the business may import the goods without being registered, provided that the excise tax due on the import is paid. So the FTA is emphasizing on the excise tax shall be paid to the authority even if you are not registered. And here we are just like giving a small an ML, it's a trading company, and they are the cigarettes as an excise the state. However, they are not with the FTA as an excise GRN, and they don't import or release excisable goods, so they don't have the right to like register basically. So they imported, like they are starting the business, so they are importing some samples just to give it for free as an FOC for some people to make the branding and the marketing for the company. They should not they should not, they can actually import the goods without being registered for the excise tax. They just have to make sure that they have paid the necessary excise tax on the samples. Going forward to the second change in the law, which is long waited, to be honest, because when it comes to the remaining, how they call it, the normal stock, a little bit unclear in the law, and actually the law didn't touch it at all. So can we change the slide, please? So the law and as well the executive regulations didn't at all or mentioned at all the remaining stock. When bulk calculation, the stock that we are having into two, and excess goods and remaining. So the law has spoken previously before the amendment, before the changes, about the how to treat the excess amount, which is, and you have to pay that amount. Speak about the remaining stock. So some of the companies where they are dealing actually with the main big supermarkets over here. The biggest supermarkets over here, they actually on putting the excise tax in a separate column when it comes to invoicing them, to put the excise tax in. Previously, the FTA has considered those amounts not as a wrong collected, amount. They actually have considered it as tax, as the law has come. I think that this is a well-known case in the whole market, which is by Mr. Muhammad, Dr. Habib, which it was speaking about point. He could amounts, and he could win against the. So now the law has touched it, and the law has spoken about it. And here they are speaking about if a company will collect any amounts, any money, with an invoice reflecting the excise tax on it, even if the goods are not excisable, they are non-excisable, then it has to be paid to the authority. And the most important part is that shall be considered as a tax, which it means that the FTA has the right to impose penalties on that specific amount. Going forward, it's like I already have given the scenario, and I already have explained it. So let's go to the last change in the law, which it mainly speaks about the main topic or the main change in the law. The main topic of the law or the main change in the law is basically speaking about the limitations, the 5 years of making an audit, and that you cannot make a voluntary disclosure after 5 years of the relevant tax period. As well, you will, if the FTA will notify you with the tax audit notification, they will have to complete it within 4 years. So I believe we have explained that earlier in the VAT changes, and as well Mr. Hazaifa also have spoken about it. So there is nothing, we have already explained it twice, so I don't think it is good to explain it for the third time. So I would like to give the word to Mr. Baghdadi, so he can like go through the law and actually make us understand more what are the consequences of those changes in the law from a law perspective. And still, as I was saying, we will have a Q&A or an open discussion by the end of the webinar. So please go on, Mr.
Hello, everyone. Thank you, Ahmed. Thank you, everyone. And thank you for your precious input on the latest amendments to the various tax laws which have been recently introduced. First of all, I believe we are almost towards the end of our session. Just to make sure that our attendees are, everyone is on board. And just for me to understand how much engagement we have so far. Is there any chance that our attendees hand just to make sure that they are engaged with us and that they are already aligned with what you have provided so far? That would be really kind of them. I'll take it from here. So as my colleagues from ITC have mentioned, there have been several amendments to the tax law provisions with specific emphasis on the tax procedures law and with the corresponding as well amendments in the excise law or VAT and even with the recently issued corporate income tax law. Upon seeing these amendments and the differences that have my kindly flagged, see that the direction of the FTA or of the authority or even if of the Ministry of Finance is number one is to open more doors and more routes for taxpayers to have more room to resolve their issues with the FTA themselves. And a clear example for this is the additional step of review of tax assessments or penalties assessment, which have been added to the tax procedures law, which Mr. Huzaifa have referred to. Another element that we have seen in these amendments as well, that number of these amendments are targeted towards to close some pending issues that have been litigated before the courts and have been favorably decided for taxpayers. And a clear example for this, what Ahmed and Mr. Huzaifa and Mr. Ahmed have mentioned regarding treatment of collected amounts by mistake as due tax. And obviously the first impression that you would get of collections of amount by mistake and treatment of it as a due tax is that automatically it would be subject to applicable penalties. Obviously, we haven't seen what would be the court's reaction to this, but these kind of amendments are mainly towards, as we have mentioned, is closing the route for a number of, let's say, old litigated issues that are currently before the courts or have been there before the courts and have been there since 2018. So it is of essence that these amendments would be considered carefully. It is of essence that we understand as well that when it comes to interpretation of tax laws as per the practical experience and for the previous years that we have had with the tax regime is that a taxpayer would also need to see how I and will interpret the tax provisions. This is of essence because we have seen instances, and in my personal opinion, we will see instances where the FTA will have their own specific interpretation or application or enforceability of certain provisions. Before I go through the revised stages of dispute, I call it tax dispute, before the various committees and the courts, I will just quickly touch upon some of the issues that have been raised by my colleagues in their presentations and which have been flagged by the amendments of the law. And one of these issues is, for example, the amendments that have made towards tax evasion. Obviously, tax evasion have been there since the inception of the tax regime. And obviously, these are amendments either towards penalty or towards widening the scope of what we deemed as tax evasion, etc., etc. But the main thing about this is this would show what would be the direction of the regulator or the FTA or the authorities onwards. This shows that if we have seen through the past 3 or 4 years that the FTA is mainly focusing on working around audits, working around filing cases, defending cases, filing counterclaims before the court to claim tax, taking enforcement steps against certain taxpayers. In my personal opinion, I think as of 2023 or the second quarter of 2023, the approach of the FTA will be different. It will be more harsh. It will not be just through this route. There will be the tax evasion route. And the difference, obviously, is that there will be a criminal route and not just the administrative or the normal recovery route, as we may call it. So this is something to take into consideration. And this is mainly attributes to the evolvence of the tax regime, and at the same time the FTA as a regulator as becoming more and more established and having more and more established tax regime. They want to show as well that non-compliance with the tax regime, especially that lots of interpretation have been given during the past years for several laws, would be handled differently by the FTA. It would be handled more seriously, which really requires all taxpayers to make sure that they are compliant. They have the proper and necessary housekeeping and proper, let's say, safety measures within their internal bookings and their systems. So this is mainly pertains to the tax evasion amendments. Regarding also one of the issues that have been raised by my colleagues regarding the amendment towards the director's power to ask the court to take necessary actions against taxpayers. A new amendment, tax procedures law. Previously, Article 14 of the tax procedures law was providing for the Director General's ability to issue an administrative order. And by virtue of this administrative order, it would be submitted and filed by the State Council to the court, based on which the court would decide what kind of measures would be taken based on this administrative order. Let's say the interesting thing about this amendment is that it shows the intent, the FTA's intent to also take more, what we call it in law, interim measures, as well enforcement measures. With the exception of 2 or 3 cases that we have seen over the past 3 years or 4 years, when it comes to executions, all the measures that have been taken by the FTA were all measures towards when they reach a point that no recovery is guaranteed, or they reach a point that there is a final judgment by the court, then an execution file or enforcement procedures would be taken, based on which action would be taken against the taxpayer. We have only seen 3 instances where interim measures have been taken, and these have been really sensitive cases or specific cases for whatever reasons. But this amendment gives an impression as well that the direction of the FTA on the long run might be towards that once there is a pending liability, regardless if it's based on valid grounds or invalid grounds or challenged grounds or disputed grounds, the FTA might resort to taking such measures as interim measures from the beginning as mean of obviously securing their the collection of whatever amounts that have been fixed either by the assessments issued or fixed by the VD that have been filed. So obviously this goes online with the fact that if a taxpayer wishes to challenge a tax assessment or a liability that have been imposed, a financial liability that have been imposed by the FTA, needs to pay the liability in question or a percentage of the penalties in question in order to challenge this before the court. So mainly, when you see all these amendments, it's mainly towards securing recovery, putting pressure on taxpayers to be compliant, putting pressure on taxpayers to not to flee the business or flee the country or set up or another structure. So these are the main highlights that I can deduce from the differences that have been highlighted by my colleagues. Obviously, there are more details and background around it. We can actually get into this in a different occasion. I'll go now to the revised stages for the dispute process before either the FTA or the competent committees or before the court based on the new law. So as everyone would know, I think by now and after those years, is that once you have question, and obviously when it comes to questions of liability, financial liability is either as a result of a submission of a VD or either as a result of tax and penalties assessment that have been issued by the FTA as a result of an audit. These kind of liabilities, the standard for challenging this was always to go to the reconsideration committee. After the reconsideration committee, you go to the tax dispute resolution committee, and then you go to the court. As Mr. Huzaifa has mentioned, an additional step have been added by virtue of which once you have a liability, you can resort to the FTA to revise the issued assessment or the issued position and to reconsider its position accordingly. However, when you see the provision in the law, it talks specifically on revising tax assessment or a part thereof or consequent administrative penalties. It doesn't talk about a liability arising from a VD or the penalties that have been inflicted as a result of a liability from a VD, from a voluntary disclosure. So this needs to be taken into consideration because I'm not saying that this will not be tested or we're not going to test this. Obviously, we're going to test it, but at the same time, in order to ensure or managing expectations and to be on the right direction, this is what actually the law is providing. According to my initial reading of the amended procedures law, tax procedures law, I haven't seen a specific timeline according to which this request for revision would be filed from the date of the assessment. But obviously, since you have a 40 working days to file a reconsideration against the assessment, this kind of application needs to file as soon as possible. And you need to take into consideration very delicately that the law is not clear on the interplay between this kind of application and reconsideration. In other words, if you don't get a favorable decision on this application for revision, obviously you should go to the reconsideration, but it doesn't provide for a certain timeline according to which you would go to the reconsideration after this application. So in my personal opinion, this kind of step would be taken in parallel with the reconsideration if need be, but as a best approach, this step should be taken as soon as possible. And hopefully, I believe the FTA now is more equipped with tools and resources. Hopefully, you would get a resolution on this application prior to the deadline for submitting a reconsideration so that you can decide how do you want to proceed forward with the reconsideration. So this is a very important point. As we always tell our clients and even our discussions with our day consultants from ITC is that the main elements for any dispute from the initial stages, either before the reconsideration or before the court, is that two things you need to take into consideration. Number one, what would be the underlying decision that you are challenging? It has to be an administrative decision. i.e. it's a decision taken by the FTA. Number two, it has to involve a financial liability. And number three, it has to be done within the relevant timeline. So this very important point is very integral, because if you do not take it into consideration from the beginning, this would cause the dismissal of the whole dispute or the whole challenge through the whole process. So this is mainly towards to the initial stage. When you see the further amendments that have been done to the law, is you will find that merely for the next steps towards the TDRC, you'll find that the only difference, for example, for the TDRC is that there is no, let's say, ability for the TDRC to ask for an extension. And obviously, this most probably have been done because the TDRC have been facing lots of workload recently. We have seen periods where the TDRC totally didn't give any decision actions. We have seen recently a change of approach from TDRC towards certain cases by virtue of which no reasoning is being given, and the role is more towards recalculation of penalties, but no advice on the technical position in question. So I would say that this kind of amendment is towards to trying to make the role of the TDRC more efficient, and also to give more room for the TDRC to push some cases directly to the court if they do not give a decision within the prescribed timeline. You will find that same if you want to go to the court of first instance, you have 40 working days from the date of issuance or non-issuance for decision by the TDRC. Would go directly to the court. And this is a very interesting point. Once you hit the court stage, you will be subject to the timelines provided in the general law, meaning in the civil procedures law. So the filing an appeal against the court of first instance judgment is within 30 days before the court of appeal. And interestingly, a new amendment have been also issued recently to the civil procedures law, which have changed the timeline for resorting for appeals before the Supreme Court to be 30 days rather than 60 days. And this is something is very important and very integral to be taken into consideration, because some people are still not aware of. I think it may cause some issues on the long run. Obviously, this is mainly towards trying to speed up the process before the court, hopefully, and to get decisions accordingly. So this is mainly the process. We have been through this process, and I'm talking obviously about the previous process without this additional step. Through the past years, we have seen lots of amendments like Decree 49, like the amendments to the tax procedures law, which were issued in November 2021. So it's in continuous development. But what is really the common between all of this is that the changes are always towards coping with the load of the tax challenges and trying to resolve these challenges. I'm not going to expand on this that much more than this. I'm going to just refer to some integral points to be taken into consideration when it comes to litigating or disputing a tax challenge, which is very, very important, and which is the, let's say, the differentiating factor between a successful tax challenge and I'm going to say it as a non-successful tax challenge. One of the things that we have seen during the past couple of years is that thankfully I have been successful to be having the lead on the main successful precedents before the Supreme Court to date, as of date of inception, starting PepsiCo, Dubai Refreshments, until recently. Is that it's not necessarily that your success before the courts, which is a different game compared to the committees and the FTA, that would be based on tax law. It can be based on general law. It's not necessary that the interpretation that you would adopt would be based on the tax law. It can be based on the general law. And this is something that you need to take it into consideration from the beginning and to take it into the arguments from the beginning to be able to take it forward and develop it further. And we have seen judgments that actually technical position, but were favorable to the taxpayer because mainly the argument went through the general principles of law rather something that's very interesting to see how come into play with the recent amendment. Clear example of is treatment of by mistake as due tax will react to the precedent or a final exclusive binding precedent on this previously. If legislation comes against, should replace it from the, but at the same, different characterization. Say yes, it's treated as due tax, but not necessarily it would be subject to administrative penalties. There might be or penalty. I'm giving this just as a general example to react, but what I can say is nothing is guaranteed before the courts, and nothing is also taken for interpretations and characterization of the relevant provisions. Same applies before the FTA. This means two things. The beginning, thinking out, have an issue, and handling a proper, successful dispute process in a irregular manner, and again, thinking out of the box. Thank you, everyone. I'll leave the room for questions now and for my colleagues to take the lead on the remaining parts of the presentation. I tried to be as much as concise as possible, but however, if there are any issues that would require expansion, I'm happy to address this. Thank you.
Thank you, Mr. Muhammad, for the great explanation. It was with us today. We have like some questions, and we would like you also to have a part of it. Basically, someone is asking the first is speaking about the tax evasion and maintaining the records for 15 years. The second question is speaking about the deregistration and the pre-approval and what should be happening subsequently. So I will be answering the second question. I will give a little bit on the first question, but I believe that mainly you will have to answer that part about the tax evasion and how the FTA should prove that. So about the deregistration, the pre-approval, it comes quite fast and quite quick. Subsequently, it depends on the taxpayer and the FTA. After getting the pre-approval, you will have to clear whatever you have on your portal. Like if you have any payable amount, if you will have any refunds, you should try to finalize it ASAP. So that will allow the FTA to give you the final approval. The first question is speaking about the tax evasion. So from my point of view, you will have to keep the documents like, yes, for 15 years. But again, it has a very important condition that you should, the FTA should prove that you are making a tax evasion. So what do you think about, what are the conditions that the FTA can make a tax evasion on a company, Mr. Muhammad? Mr. Muhammad.
So mainly, okay. The crime of tax evasion and has two folds when it comes to the UAE laws. And this is something that needs to be taken seriously. If you remember in Jan 2019, if I'm correct, or 2020, a special tribunal or a special court have been established in order to litigate tax evasion cases and to litigate money laundering cases. And the reason I'm going to get later. So, main element for successful tax obviously is that to prove that the an unpaid liability for the FTA, which the taxpayer intentionally evaded to pay to the authorities. And at the same time is that when he held this liability and evaded paying it, he had knowledge, clear-cut knowledge. And this is what we call the moral element of the crime, not the material element. Material element is non-payment, obviously. But the knowledge that this amount is taxed, due tax, obviously main elements by that would be the authority before the criminal court. Really, the FTA's interpretation. We have seen the number of cases, I would say around 3 cases more, of tax evasion cases which have been directly initiated by the FTA against certain taxpayers. Judgments have been issued by the court accordingly. In this case, we have seen that these were clear-cut instances where either the taxpayer evaded payment of the tax, the taxpayer took certain steps to hide the relevant transactions which would prove, or documents which would prove that this transaction should be taxable or have taken place, etc. But any cases where tax evasion cases were taken forward based on controversial issues pertaining to interpretation of law, if the tax is due or not due. For example, if it's related to input tax, which was supposed to be refunded, or it is standard rated VAT transaction, for example, depending on the difference of opinion between the. We haven't seen such thing, but we have seen more smuggling. We have seen this more on stamping related issues for some products, excise products. So we have seen very, very limited cases. As I mentioned, this will evolve further. The test, as we call it in the law, for the existence of tax evasion is very, very vague and general under UAE law. And going back again to the initial point that I mentioned regarding the establishment of special tribunal, I have personally been involved in a case which mainly is a money laundering case. It doesn't involve a tax evasion here in the UAE, but it has a tax evasion element in another jurisdiction. So one of the characterization and interpretation by the court as well, that sometimes the court would treat tax evasion as some way as a related crime to money laundering. So, but obviously this will applies in a very limited situations and limited positions, but also it's something that has to be taken very, very seriously as well, because if you go to the relevant AML, anti-money laundering provisions, or the relevant laws in this direction as well, you'll find that there is also great room for further liability under these provisions. So answering the gentleman's question or the lady's question, the test is very general, it's vague. It depends on the discretionary power of the FTA and the competent court after this. So better be prepared. I'm not saying it will lead to immediate liability. Obviously, anything should be challenged and should be defensible. But again, the FTA will have really wide discretion and wide interpretation regarding these instances.
Thank you, Mohammed. A question from Miss Lisa. Is there is also a time limit for like placing or requesting a VAT refund from the tax? And she's speaking about like some refunds that's still pending for the returns of 2018. actually it was not mentioned in the law, and it didn't touch that specific point, but there is a carry forwarding. Like you can carry forward the balance that you are having, and there is no for such a thing in the refund from the FTA, because they call it a carry forward balance. And if you have like some issue for like the refunds, for asking the FTA for the refunds, you can contact one of our commercial team or one of like, and they will help you. I think that all the questions. Before we finish and close, let me just like invite you for our next webinar, which is going to be next Wednesday at 2 p.m. At 2 p.m. 2 p.m. It's gonna be speaking about the corporate tax. That is the long-awaited like law that should come from the FTA, that it is speaking about the corporate tax. They are putting they are setting the structure for the corporate tax over here in UAE, and it's always better to have like a gap analysis or impact assessment for the new law for a better tax planning when it comes to the tax pool. That was it, and it will be next Wednesday at 2 p.m. I think one of my colleagues is telling me that there is a question from Mr. Mohi. I'm sorry. Thank you all for your efforts. We need to know, those amendments are applicable for the MCC as well, or only mainland? Yes, it is applicable for all the free zones inside the country, because the VAT law or the excise tax law, it is applicable on all the companies that they are in the state. And I mean by the state, as it mentioned in the definitions of the decree law, UAE. I think the questions, and yes, we will be, and we will have that part of that webinar. It will be on our YouTube channel, sharing it with you through email along with the slides. Thank you everyone for attending our webinar today. Thank you Mr. Huzaifa and Mr. Muhammad and Sahichi as well. And thank you everyone, and wish to see you all in the next webinar. Thank you all. Have a nice day.
Thank you so much.